You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, you know that rockin' tune means it's time once again to rock out with a little program we like to call the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from the Options Insider Radio Network, where we bring you a host of options and indeed derivatives related goodness. Looking for education, we got you covered. Looking for some what's trading, some good active market commentary, got you covered there. Maybe you're looking for a financial advisor, or you are a financial advisor. Heck, we got you covered there. Futures options covered, check. Industry chats and all sorts of fun stuff like that with some professionals from the space. Got that covered as well. Gonna have a bunch of that coming for you starting this week from the big options industry conference there in Miami. I'll be down there all week, so stay tuned for that. In the coming weeks, we'll also have a very cool for listeners of this network. We'll also, with the exclusive audio partner for that conference. So all the cool panels that go up down there. I know a lot of you guys don't get a chance, particularly in the retail side, don't get a chance to really check out these industry conferences. They're very expensive to go to. They're not really aimed at you, but a lot of the stuff they talk about is very, very near and dear to your hearts. Things like fragmentation, how that impacts you, the market structure, things that on the surface aren't as sexy, but really, once you start trading actively and start managing your own accounts, you realize how important these things actually become to your bottom line. And we see that every year. Whenever we post this content, we get a huge influx of people. And I know not all of those, even by a long shot, are industry professionals, because most of them are down there at the conference. It's actually folks out there in the retail side who are tuning in and saying, hey, I want to learn more about this stuff, this clearing stuff, this margin stuff, this exchange kind of combat going back and forth here, all these exchange leader panels, stuff like that. So we'll have all of that coming for you right after the end of the conference. You have to wait till the conference is over, as you might imagine, before we post that stuff. We don't want to cannibalize the attendance. But in the coming weeks, we're going to have a host, an explosion of content coming out of the options industry conference. In addition to the panels, I'll be sitting down with all the heads of the different brokerage firms and the exchanges and the trading firms and the vendors to kind of get a little bit of their insight into all the hot button issues that are going on in the space. Maybe I'll give them a hard time once again about the fact that there still is no after hours trading for options. Maybe light a few fires on behalf of you guys out there for that, and a lot of other fun stuff. So stay tuned for that coming down the pike. If you're subscribed to our main network feed already, you'll get all of it. If you're subscribed to our interviews feed, then of course, so you'll get the interviews coming out of the show. Or if you subscribe to our conference feed, that's where you get the conference stuff after the show. But the network feed is probably the easiest way to go. If you're not subscribed to that already in iTunes or through the app or wherever you like to get it, go grab that, because pretty much all of our shows come out through that one. So you'll never have a shortage of quality options and derivatives oriented content coming your way, including, like we said, quite a slew of good stuff coming out of OIC starting very, very soon. And joining me on this here program, the old option block, starting off with the man beaming in from that tropical microcosm here, microclimate, I really should say, here in the Midwest. You know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. Thanks for joining us from scenic and sunny St. Charles, Illinois.
Very scenic, very sunny today, actually. We're around the 80-degree mark, and today I'm actually telling the truth.
Yeah, it's not like we're lying like we usually are in January and saying it's about 75 degrees. Today it actually is pushing 80 out there. That's impressive. You got the shades out, you hanging out by the pool?
Well, of course, yeah. It's poolside. I mean, why wouldn't I? And actually, I'm looking at it. It is in the 70s. I'm sorry. I did inflate it just a little bit.
I know you. You can sling apple puts from just about anywhere.
Are you talking about the pool or the temperature?
Well, a little bit of both, maybe. I don't know.
I know you, sir. You can sling Apple puts from anywhere. Cabana side, potty side, wherever you got to be, sir. That's where you can sling some Apple puts. So I know you're doing good business out there.
I swing my Apple puts from Riverside.
Yes, you do. He does indeed. Listeners, joining us from the world headquarters of the pit, none other than the greasy meatball himself, also known as the manager of the Mini Metals, coming to a small one-horse town near you very soon, Mr. Mark Sebastian from OptionPit.com. Mr. Sebas, welcome back to the old Option Block program, sir.
Good to be here. Good to be back. Always great. Never whack.
Yes, indeed. That's what I say about you all the time myself. So we got all the nice ring of suburbs right around the old city, of course, beaming into the central hub that is the Options Insider HQ, coming at you from another lovely and tropical day here in downtown Chicago. So we got the whole area covered. And without further ado, it's time for us to cover the markets because it's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we break down the wet and wild world of options and indeed the broad markets themselves. We are recording this Monday, May 4th, for all of you playing the home game, and it was indeed a bit of a green day, not perhaps as strong as some of the rally modes we've been in recent sessions. Most of the major indices closing up fractionally on the day, a fraction of a percent here and there. We see S&P up about 1/3 of a percentage point, the Dow about the same, Q's up a wee bit less, and the VIX cash also to the upside, getting some of that weekend love that came out, perhaps coming back in, hovering still south of the 13 handle out there in VIX cash land, about 12.9 or so out there. So a lot of stuff kicking off today, a lot of stuff kicking off this weekend as well. We'll get into all of it. Before we do that, let's dive into what caught your guys' attention. Perhaps we'll start with you, Uncle Mike. Ever since the last time you were on, there was a little bit of a sell-off in your beloved fruit company. Has that changed your mind? Are you double writing now, the 135 strike? What's going on with you out there?
Not quite double writing it yet, but what really caught my eye today, or what's been catching my eye the last few days, is bonds, and the fact that we are negative on the year right now with TLT. At least since the last time we've spoken, I believe we were higher. At least I know we were higher on the year when I was on the show last, but TLT is one where I think it's kind of an indicator of that maybe the market might be factoring in some things that the Fed might be doing in the near future. Who knows? You never really trying to guess what the Fed's going to do is not an easy task by any means, but I definitely think we're closer to the top than the bottom in bonds, and so TLT's been showing that a little bit lately.
Anything else catching your eye out there? You still rocking those XLE puts about gold, some of your other bastions of attention lately catching your attention today?
Nothing really. It's kind of the rest of the marketplace, like Apple, for example, it's down 25 cents, so really not a lot to report there. I still believe that Apple can be a good company in the long haul, but once again, I want to reiterate my analysis that I don't think that I would not be getting into it right now as a new position. And if you have it as an old position, I think that hedging it you'd be wise to do so at this point. In terms of gold had a little bit of an update today. It's pulled back a little bit recently, but it did have a nice little upturn today. With XLE, I think that just in oil in general, I still think that we're closer to the bottom than the top in oil. It's kind of XLE itself is kind of still sitting there in the low 80s. So not a lot going on today. The market as a whole moved up a little bit, or the stock market anyway. But not a lot going on today. But the main thing that really caught my eye today specifically was bonds. And, it's kind of a slow day when the main thing that catches your eye is bonds.
That's definitely a slow day, at least for me. So when that big sell-off, close to 10 points, happened in Apple, it didn't cause you to readjust, perhaps stampede for the exits, load up on extra puts to the downside. Nothing along those lines, kind of just the wait and see?
Yeah, wait and see for now. I think that it's something that you'd be wise to hedge on, and so I'm looking to kind of get out somewhat strategically like I did on the last run-up. I'll never get out of all my Apple, I don't think. I don't see how that's possible. But I think that right now it's a good time to start to look towards the exits of taking some money off the table. That's for sure.
And Mr. Sebastian will turn our gaze your way now. What caught your eye out there in the old pit chat and with the old option pit mentees today?
It was a slow one. It was a little slow today. I think we can all kind of agree on that. But what we were kind of looking at was some of these names that have gone through a little bit of trouble. That maybe are starting to look like decent put sales. Your McDonald's. Some of those other names. CSX getting kind of slapped around because Ackman didn't want to talk about them. Little Facebook kind of seeing what was going on there. Apple again. I am not a person that would say I can't imagine owning Apple. I think there are a lot of people that say, well, why wouldn't I can't imagine not owning AT&T or Lucent or General Motors, or a lot of names that no longer exist, and so I'm sure Mike could come up with a lot of reasons why that would change. But for me, the big piece I was looking at was just kind of the VIX continue to ease back, and as Mike said, bonds really taking it on the chin, threatening that 2.25% yield, just unbelievable move. In kind of an odd way. I'm a little surprised.
Yeah, it has been a weird time. I think it's probably the best technical term for it out there in bond land of late, and today was no exception. But speaking of unbelievable big news coming out of the weekend, of course, and moving markets today a little bit, up about 0.5% or so. Of course, the big story, well, actually, there are two big stories of the weekend. Of course, the big fight, but also the big premiere of the Avengers, which, of course, will be feeding into Disney. A lot of people looking at Disney having their big announcement, I believe, before the open, actually, tomorrow. Yes, so hopefully, if you're out there trading Disney, you got all your options trades off before the bell today. Looks like they went out at about a $4.50 or so dollar straddle out there. Stock closed right around 111, so a little over 4% move that they're expecting out there for Disney. Of course, I'm joking. Stock up a bit today off the love of the Avengers. Speaking of which, any of you guys manage to catch that movie? I did this weekend. Did either of you guys manage to catch it?
I was at a wedding all weekend, and so the answer is no, but I would have loved to.
You had no fun this weekend.
This week.
Uncle Mike, did you get a chance to catch it? You got little guys. You get a chance to catch it?
Have not as of yet. How was it? Thumbs up or thumbs down?
Fantastic. If you're deep in that world, and my little guy is deep into the Marvel rabbit hole right now, he's been waiting for this movie for about a year. So it was like a religious experience for him going to it. It was fantastic. Just seeing him at it was almost worth the price of it right there. But yeah, fantastic. If you like those kind of movies, this one pretty much delivers in any way that you could possibly need. 2.5 hours of extravaganza. I was primed for more at the end of it. I'll take another 2. Let's go.
Wow.
More Battling Ultron. I'll take that all day long. That was good stuff. So yeah, if you guys haven't checked out Ultron, that's our 3-second movie review here on the program. But it was fantastic. Of course, going back to Disney for a second, just the success of Avengers, of course, Marvel being one of the big kind of really successful units in their stable. But they've made a lot of turnarounds over there, particularly just over this past year. The stock's up nearly 17% year to date. Stock's looking really, really strong. They've made some turnarounds even in some divisions that have been notoriously fairly weak for them. I know Interactive was a big one for them that really, they just could never make it work. Even though they had this great stable of characters, Mickey Mouse and Disney and all these guys, they could never make them successfully translate onto the video game platform, which obviously is a big one. If you're aiming at the younger market these days, you got to have some sort of successful game. They tried. They ended up pretty much, I think, shutting down most of their Interactive and kind of starting over with this whole big, how much they spent on it, like close to hundreds of millions of dollars on the Infinity, which ended up being a gamble that seems to have worked out. And now all of that combining with the parks doing well, and of course the movies knocking it out of the park, seems to be really translating into an interesting success story here for Disney. And of course, options are responding in kind, doing about almost 3x ADV today is my expect going into earnings. About 2-to-1 calls over puts. So a lot of love here on the call side of the fence for the Disney folks. Mr. Seabass, you guys checking out Disney at all in the chat room today? Any of your high-end mentees there looking at Disney, or are they looking a little bit farther afield?
Oh, I mean, I feel like that's certainly the Marvel stuff is a little priced in, and actually the timing of that movie was really poor because they ran into the Kentucky Derby, and it was actually the second grossing event of the weekend because the Mayweather fight brought in $400 million. Despite the fact that now the big difference is one was like 2 hours of action-packed excitement, and the other one was a really boring boxing match.
You got to kind of feel for them. They announced these release dates like 2 years ago, and then they happened to announce 2 months ago, oh, we're going to have a fight of the century on that same day.
Yeah, the fight of the century that ended up being the run and height of the century.
Was anybody surprised by that going into this? Everyone knew Mayweather's a defensive guy, Pacquiao's offensive.
Anybody who doesn't know boxing, yes. They're all expecting, Apollo Creed and Rocky, where they just throw haymakers at each other, and that's not what boxing is.
Rocky gets about 10 years worth of brain damage in about 30 seconds on the screen.
I know that you wouldn't last. No one. If fights were like Rocky, they wouldn't last more than a round.
I've become much more of an MMA guy than a boxing guy these days. It definitely attracts me more because there's a lot more to it than just standing up and swinging. But yes, I wasn't really paying attention to this one, but I was amazed how many people were into this. I was in elevators all over the city and random people. I heard women chatting about it behind me the other day in an elevator downtown. I was like, how often do you see women kibitzing about boxing in a random, business elevator? It's just not a scene you see very often, yet it was everywhere. I knew people who I'd never heard talk about a combat sport in my life that I've known them say we're going out to see the fight this weekend. I think the gate was bigger than the Super Bowl, I believe, or on par with it, which is madness when you think about how big the Super Bowl is from an American sporting and psychological icon and event. And now to have this random boxing match between these are not heavyweights. This is not Ali Frazier or Tyson, these are guys, I think they're 155 and not even that big of a guys. And yet they're just captivating the mind share of people out there. That to me is amazing. I'm looking forward to the day when an MMA fight can do something similar and just captivate the nation like that. But either way, yeah, the gaming stock's certainly doing well. The sports books just cleaning up. I heard some interesting stat. You'll like this, Mark. I heard some interesting stat the other day that Pacquiao clearly and of course, this is the side. We had our movie aside, now we're going into our boxing aside, but I think we're allowed because there's some big events this weekend. But I heard some stat that he's such a big national hero in the Philippines, and there was so much money coming in on those lines on Pacquiao from the Philippines. People were just betting, their life savings and betting tons of money. Not a very rich nation over there, per capita income very low. And yet the amount of money pouring in from the Philippines was just overwhelming. And people were starting to speculate if Pacquiao loses, because all the money, as you might imagine, was going on him, that there could be some serious economic impact as a result in the Philippines. So now, of course, it happened. We'll see what happens. They may have to take a few days off down there in the Philippines. We'll see. Everyone pretty much, they bet their annual incomes on this little guy to come out. Did you watch boxing at all, Uncle Mike, or is that kind of just flying under your radar?
I like the MMA. Just to kind of summarize in terms of what you guys are saying. First off, Rocky is totally real. That's how all boxing is, and pro wrestling is real too. So now that that's gotten out of the way, I think that in time MMA has a very good chance at overtaking boxing, just because, well, quite frankly, I think it's a better sport. And just to go along with you, Mark. Even I was hearing about this fight even in very rural areas. I mean, I traveled last week, and you're right. It was just that was the talk of the nation. And the concept of this, I didn't know that it actually matched the Super Bowl gate, or was even in comparison to a Super Bowl gate. To give you guys an idea of what the Super Bowl gate might be, figure an 80,000 seat stadium. I looked into taking my wife there for her birthday one year, and basically it would have come out to be the tickets alone, and this wasn't even I just looked to see, well, what's the worst seat in the stadium? What would it cost? Just as a starting point. And I don't like sitting in the worst seats of the stadium, quite frankly, but the tickets alone would have been about $3,500 a piece. And so I'm thinking, okay, I don't want to sit in the nosebleed seats, so getting a good seat's probably going to be a lot more than that. And the fact that fight can match the Super Bowl gate, that's phenomenal, especially for a welterweight fight. I mean, kudos to whoever promoted that fight. That's very impressive.
Yeah, I was hearing numbers like, I think the minimum cost to get in was well north of $4,000. That's just like to get in. Probably it was, a lot more.
They made $400 million.
Yeah, so that's insanity.
Now, Mark, the one problem and the reason why you can't get like this super fight quite with the UFC is because there are so many. It's so much easier to have a fluke knockout and a fluke win in the UFC than it is in boxing. A Buster Douglas Mike Tyson event in boxing happens, once every 25 years, where an underdog actually like really pulls it out, something like that. You can see that UFC, on a 7-card lineup, you'll see that 2 out of 7 times. So that's kind of the thing to think about with UFC and why we are never going to get this major piece. The other problem is that unlike boxing, the UFC players don't get paid. It's more like the WWE, where they're all salary contract guys that maybe get some bonus. So
yeah, they get nothing, nowhere near what Mayweather and Pacquiao are making. That's for sure.
Nowhere close. Now, boxing. The one thing I'd like to see is boxing get back to being free on television again, on ESPN, or having fight night, things like that.
I think it is. There's this new thing called Premier League Boxing or something like Premier something boxing, and it's all free on I think Spike. So there you go. If you're a boxing fan, get into it.
And I'd like for it to get at least slightly less fixed than the WWE. That would be the other.
That will never happen. As long as the Don Kings and his ilk float around in the hinterlands there of boxing, that will never happen. I would love to we'll have a whole MMA/trading show one of these days. That would be awesome, but we do need to bring it back on to do options related stuff, even though that would be an awesome show. Maybe I'll bring on, I know there are some guys who are like former big UFC guys who are now active in the financial. Maybe I'll bring them on. It'll be a good excuse to kind of hit both areas on the show. That'd be fun. But moving on to some options related stuff, some other big news coming out this week. CBOE had their earnings call. Whenever they do that, we always tend to mine it for some other interesting nuggets. And one of these kind of seems like kind of the no-brainer of the century. I think people might even be surprised that they hadn't already done this. And this is, of course, we've always lamented, not so much on this program, sometimes on this program, mostly on VolViews, kind of the lack of traction of VXST. We said, hey, VIX does well, SPX weeklies do well. Clearly, there's an interest in short-term institutional volatility, yet for some reason that product hasn't taken off. Well, now they're bringing the mothership into the weekly duration. They're planning on launching weekly VIX futures and options. No release date yet, of course. They never are with these things. They're expecting to start with futures first sometime in July, and then, of course, pending all the regulatory SEC nonsense that has to go on the options side, the options will follow probably towards the end of this year, maybe Q3. They can get all that stuff in a row. And just some stats coming out of the CBOE: 35% of their total volume is coming from weeklies these days. Now that's up from 26% just a couple of years ago. So this seems like a no-brainer. It's hard to believe that one of those popular products in the world, VIX, doesn't have a weekly on it, yet it doesn't for a variety of reasons. So does this get your juices flowing at all, Mark, or some of your pit chatties there like to sling VIX?
Yes, absolutely. And what's funny is I remember a couple of years ago I was having a conversation with a guy who worked at CBOE, and I said, well, don't you think weeklies, you need to readjust because of all these weeklies that are trading SPX? And the guy was like, what? They're like, 6% of the volume. It's not like they'll ever have a real effect on volume and volatility. And I said, I think they will. And I won't reveal who this person was, but clearly
it was Ed Tilley. You can say it.
One of us was wrong.
Right here on the show, Ed Tilley, CEO of the CBOE.
It was absolutely Ed Tilley. No, it was not Ed Tilley. It was someone a few rungs down. That's why they redid this whole structure. We've all known that this was going to happen since really they reconfigured the calculation, and Ed Provo kind of let the cat out of the bag at RMC, and now that they made it kind of official on this earnings call.
This is kind of like the what have they been waiting for kind of thing. This is like, especially now, you can see now why they finally did it, because they're getting poked left, right, and center saying, hey, VIX is down, VIX volume is down. What are you going to do? This is kind of the no-brainer response to that. And sure, everybody loves a weekly. Let's throw that into the mix as well. And who knows, maybe that combo will help kickstart VXST finally. And
yes.
If anything this could potentially do that. So interesting stuff. A couple other nuggets coming out of the CBOE call. As you might expect, as I just mentioned, volume still a bit of a sore point for them. I don't think they were blaming the term structure of the futures this time, though. I'll have to go back and check. They did a total in the quarter of 91.4 million contracts, a decrease of 4% from March. And I'm sorry, this is April volume, and a decrease of 15% from April of last year. So not exactly robust, and a lot of that coming squarely out of the VIX options that are just kind of falling off a cliff of late. And also they mentioned they're going to be probably retooling their platform, so gearing it towards more of the low latency crowd. I know that might cause some groans from some of our listeners out there saying no more HFT guys playing in the option space, but clearly those are big players from a volume perspective here in exchange. You have to entice those, so they're going to retool their platform going towards that. And I'll be bringing some CBOE guys on probably down from the OIC conference, so we'll get some more insight into all that stuff coming this week, hopefully. Meanwhile, time for us to keep on rolling right on into the weirder portion of the show. Yes, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
That funky tune means it's time for the funky part of the show. Yes, it's time for the Odd Block, the portion where we get into some of the weirder things that are lighting up the old options tape today. We're going to kick things off in a product a few of you guys may have heard of, good old Russell 2000 ETF options, IWM for short, closing today 122.41. This is the name that, as you might imagine, does some paper, about 445,000 contracts a day of late. So it's actually smoking VIX these days, which is not something you say too often about IWM. I think VIX ADV is around 400,000 these days, or maybe even south of that. So interesting stuff out there. And of course, today doing a little bit less than that, doing about 350 or so today. So it wasn't an overall volume day that really caught our eye as much as one kind of weird funky trade going up in between here. Let me pull it up on my screen for us here. Was a bit of an out and down roll. It was the June 110, July 109 put spread for going up for 44 cents, 8,000 times. Yeah, a total of 8,000 times. Decent open interest on the 110 puts, tons actually. So it looks like that's a bit of a roll. And then pretty much only 2,000 contracts on the July 109 puts. So some interesting, looks like a bit of a down and out roll a bit. Also seen about 10,000 of the July 106 puts going up today. That's on open interest of 17,000 contracts. So a lot of put love out there in July today in IWM. 8,000 of the 109 puts, 10,000 of the 106 puts. Perhaps those two are related. Could be a bit of looks like a house money roll here. Guy's been doing all right, and he's looking to do perhaps a little bit better. Mark, when I first read this, I looked at this and I thought it said June 110, 109 puts. I said, who the hell, why are they rolling? These guys drive me crazy, rolling for one strike. But this one at least he's getting himself another month in the process. So what do you think of our friend out here rolling for another month out here in IWM, as well as perhaps the possibility of that size block of 106 puts also perhaps being part of the fray?
Yeah, I mean, that makes sense. You know, the June's we've gotten away from June, where you're going to need a pretty good move for the June 109s to kick in. You could get the July 108s to get a pretty decent, to get a little bit of a kick up if we do get a sell-off. So makes a lot of sense to me.
Makes sense to me as well. As we move on to our next name here. This is the newcomer to the old odd block. I like the name. SouFun Holdings Ltd. Ticker symbol SFUN. SFUN. Closing today, $8.50, up a bit or so on the day. As you might expect, this is the name. Actually does fairly decent volume for an $8 name. About 5,000 contracts, doing far more than that. 35,000, nearly 36,000 today. And of that nearly 36,000 contracts, 33,361 coming in one mega put blast, shall we say. We saw the NOVE, so longer term, NOVE $6 puts going up in one mega block on the Philly, paper selling for 40 cents, just hitting the bid and just crushing it to the tune of 33,000 times. And apparently they can get more off because there's still a 40-cent bid out there for these puts. It's almost exactly the open interest. There's 33,656 open, so I'm not a big believer in coincidence. That probably screams close to me. But again, this guy could be just saying, hey, I want more of these. The fact that they're bid out for 40 cents still is kind of interesting. Obviously, this 33,000 lot didn't dissuade the market here. They want more of these things. Interesting. We did profile a put seller back in April as well for 40 cents on April 23rd. So there's a lot of play back and forth here on these NOVE puts. This, of course, is a real estate internet portal in China, if you're not familiar with them. They operate a bunch of things in China, also home furnishing and home improvement websites in China as well. So a lot of interesting plays. We've been talking about the Chinese names, getting some interesting vol of late, interesting realized vol. Now we got someone coming in and just selling the hell out of everything out here in good old SouFun. Mr. Sebastian, what's your take? Was this you hitting out this 33,000 lot block in SFUN?
And I'll be honest, I do not think it is a close. I think it's an open.
Somehow I had the feeling you might be leaning that way.
It is, because what happened was they traded 40 cents on the 23rd. They did another 17,000 on the 30th for 40 cents. Then they're doing more for 40. This sounds like someone who is trying to get into the stock and wants to get in cheap and or is looking for this premium collection, and it looks like there's a voracious appetite for these puts because
that's the best part.
It is 40 bid, and
it won't go away.
It's absolutely a sale.
And the stock's up today, and it's still 40-cent bid.
Yeah, this is absolutely a sale, and it is and I think it's an open. I'll be honest, and so pretty decent looking sold to you. You know, maybe there's something else involved in this. I just don't know. But this does not look like it is a closing trade on any level.
I think the fact that there's still a bid out kind of had me leaning to the fact that it might be indeed an open as well. About still almost 500 on that bid if you want to go get a mark. Because someone clearly didn't get his fill today. I want more of these for 40 cents, please. You never see that. That's odd. That tops the cake in and of itself.
No, that is a huge trade. My guess is maybe there's some sort of arb relative to the actual Chinese stock. Who knows? But it could be related to some credit offering. That's when you can see this stuff. Maybe somebody's got the other side owns a bunch of bonds. That's a one way that you can hedge this type of stuff and not have to deal with maybe some issuematic Chinese stuff is to own puts in the ADR. It's entirely possible.
Yeah, there's something going on behind the scenes. What's keeping that 40-cent bid there? We don't know what it is. There's some structural issue, some other thing, like Mark said, they're leaning on in the Chinese market, and they lean on that put bid as a result. But either way, that put bid is not going away, which is you hit it with about 60. If that's opening, that's 60,000 contracts, and it's still there for more.
65,000 still there.
That's crazy. I love it. That's why I love the Odd Block listeners, and I know you guys too. Send us in your own reasons why you think someone's still hungry for more of those puts for 40 cents. Can't get enough. As we move on to our finer, easy for me to say, that last one threw me for a loop. Final names here on the old Odd Block today. This is Clean Energy Fuels Corp, ticker symbol CLNE. Closing today right around 9.5 or so on the day. This one's down about 7% on the day, so about 70 cents. So not a banner day for CLNE. It's a name that does about 2,500 contracts a day, doing about 16,000, nearly 17,000 today. So robust activity out here in good old CLNE. And as you might imagine, given a little bit of a sell-off today, a lot of that leaning on the puts. You saw some deep puts going up out here the May 13th. We'll get to that another day, perhaps. That's one just caught my eye as I'm going through to our actual paper today, which was a little bit longer term. This was the SEP 7 puts going up 500 times when we first started profiling them. Paper buying them for 85 cents. As the day went on, more piled into the tune of a total of about 2,000 on just open interest. There's 168 contracts. So clearly opening the first kind, like I said, for 85 cents. They went out 70 at 90. So the rest of that 2,000 went up somewhere in that range, probably, or so. That first kind went up one big block on the Philly. Vol, not surprisingly, going up on that strike. People perhaps a little bit spooked by today's sell-off, wanting to get a little bit longer-term protection, a little bit pretty far south. The 7 strike is a fair way away from where we're trading, like I said, hovering today right around the 9.5 level. Pulling up a chart here really quick of good old Clean Energy Fuels Corp. They haven't really, well, actually, I take that back. Back in March, they were south of that 7 handle and fairly far south of it to the tune of $5. They even flirted with, in February this year, back in the 4 handle range. So there is a possibility that our friend here perhaps thinking that this near-term downturn could turn into something a lot uglier, hence his willingness to gobble up a bunch of the SEP 7 puts. Not sure what was going up with those May 13 puts. I'll have to dig into those. No open interest on those to speak of. Also, the call's going up 870 times, so an interesting combo/box perhaps going up here in CLNE as well. Mr. Sebastian, what's your take here on our friend wanting all the puts he can get out in September here in CLNE?
That's not very good that's not a great sign for CLNE. You got to wonder how clean Energy Fuels Corp really is if you got a big, huge put buyer of this stuff. And, if you look at the stock symbol, this has been one that's been very off to the races the last couple of weeks. So it could be somebody that's been long the stock and is just like, I don't want to deal with this thing going back to $4 like it was a few months ago. The volatility this guy is trading just nuts. I mean, it's near-term vols near 100%. So the longer-term stuff's an inexpensive 72%. So I understand why he went a little longer term, but and I understand why he's doing the trade. Probably has made some money and wants to make sure he keeps it.
Yeah, looking at this chart, I can't say I blame him. It's a little bit ugly out there, at least recently it has been out in Clean Energy Fuels, and it could perhaps be so again, though. If he is indeed a stockholder and it was trading 10 today, he may have wanted to get a little bit, perhaps a little bit tighter protection on there to save a little bit more of those dollars than just from the 7 strike on down. But c'est la vie. That's all the time we have for the old odd block segment today. And listeners, this is usually the portion of the show where we dive on into the strategy block, but we're playing around with some interesting ideas for some interesting tweaks to the format here on the old option block program. And Mr. Sebastian had an idea for perhaps a potential new segment. It's so new, so fresh, so groundbreaking that we don't even have a bumper for it or anything along those lines. So we're just going to do a little bit of a dive right on into Mark's new segment. All right, Mr. Sebastian, it's kind of a new segment, so what do you even want to call it?
Oh, this is a little bit of, I call it outside trading hours type discussion. So, one thing that caught my eye last week was that the NFL decided to give up its tax-exempt status. I think, a lot of the sports people are just like, it makes sense, blah, blah, blah. They've got, there's no reason, blah, blah, blah. But if you're a finance person, you immediately go, well, I wonder why they really did that. And it got me thinking. So a lot of people don't realize this, but really the structure, the way the sports leagues are set up is not that different from the way the exchanges were operated for years and years and years, where the exchange itself was essentially a not-for-profit with lots of employees. And really the people that made the money were the seat holders who held the equity, and the seat holders, really rented out pieces to different traders. So, owning a seat on the exchange was kind of like owning an NFL team, and the NFL was kind of like the exchange entity itself. And it got me to thinking, well, if the NFL decided to go public, what might it look like? Well, if you look at kind of the valuation of teams, the most valuable team in the NFL is either the Cowboys or the Redskins, depending on who you are. And that value is somewhere around the $2 billion mark. A lot of money, right? Tons and tons of money. But let's kind of compare the NFL to the CBOE. The NFL is going to do somewhere around $10 billion of revenue in 2015. The CBOE is going to do has done about $600 million in revenue over the past year. All right, so if you divide 10 by 10 billion, all right, by 600 million, you end up with about the NFL it does about 17 times the revenue. So right now the market cap of the CBOE is about a little under 5 billion. So if you used a multiplier model, that would place the NFL at approximately $85 billion. Now, what that discounts is the fact that the Shake Shack effect that exists in the NFL. And I think it would be the second company to potentially IPO over $100 billion. Especially with the fact that they've got this massive new contracts coming up that'll have all the mobile, all the other pieces where their revenue could go up substantially. So potentially, the NFL could be a $100 billion entity. So if the NFL is a $100 billion entity, imagine if the owners released, let's just say 32% of their stock. Well, that would be somewhere around $32 billion back to the owners. And they would still be able to maintain majority ownership, and they would be able to maintain ownership of the individual teams while extracting $1 billion out of the league. Now, you're saying, why would anybody do this? The Dan Snyders of the world are super rich. The owners of a lot of these teams, Paul Allen, you name them. Now, for every team like that, there's a team like the owners of the Chicago Bears, where literally when Virginia McCaskey dies, there's a real strong chance they may be forced to sell the team for to just pay off the inheritance tax. So there actually may be a push on that. Now, it may not happen in the next 2-3 years, but I think it could happen in the next decade, where some of these old guard die and there becomes a big push to potentially take the league public. And that's kind of what I was kind of thinking about. While everyone was talking about the NFL draft, I was talking about whether the NFL, what it might look like in an IPO, and that's kind of what I envision.
I don't think I've ever heard the terms, demutualization in the NFL uttered in the same sentence before.
It really is a very similar structure if you think about it.
Yeah, certainly here in the option space and the derivatives markets, we're very privy to that model, that transition. All the exchanges pretty much demutualized. They went from member-owned seat-based entities into essentially public for-profit entities. I wouldn't be surprised to see some sort of similar transition from the NFL down the road. Clearly, they make a ton of cash. So it might be advantageous to them to pursue something like that down the line. Mr. Uncle Mike is one of the only of us three who's actually spent any time in that NFL. What's your take on the Greasy Meatballs supposition here?
Interesting theory. I think that for many years, the NFL was, as well as Major League Baseball, were protected under the antitrust exemption through Congress. And so with that, basically they could be a monopoly, and it was just no big deal because of how they were structured. Now, here's how they're set up right now. No one's going to touch the NFL in terms of competition. Let's look at the history of this. In the 1970s, they had something called the World Football League. It was they were able to attract some NFL football players over there. Larry Zonka from the Dolphins was one of the big names that went over to it. It folded. In the early 80s, they had some interesting competition with what a lot of people may remember as the USFL, the United States Football League. And the USFL started out as a spring football league, and they actually gave the NFL a little bit of a scare. They were actually drafting college players, and what they were trying to do is they took a gamble and tried to attract some pretty big-name college players. Steve Young, when he was drafted by the USFL at first, he was actually, I forget what the number was, but he was the highest paid football player of all time when he was drafted by the USFL. Some other names from the USFL, Reggie White, Herschel Walker. They had a lot of big names in that league, and for a while, they were drawing some very big numbers at the gate. You'd see 50, 60,000 people. They packed Soldier Field when the Chicago Blitz played there. So for a while, it did pretty well, but it fizzled out as fast as it grew. And basically,
a lot of people blame Donald Trump.
That's the other part of it. Donald Trump was actually he was actually the owner of the New Jersey Generals. Now, what exactly happened with it? I think people realized it was kind of a flash in the pan and it was no big deal, honestly. I don't know if it was necessarily Donald Trump's fault, but you had the ideal product in the NFL. You really didn't. It was a great solution from whence there was no problem. I kind of view the USFL kind of like single stock futures, quite honestly, in that why do a single stock future when you can just buy a deep in the money call or a deep in the money put if you're going to have to put up 20% in the margin requirement? That's my opinion on it, but that's for another day. Now, fast forward about probably about 15 years to 2001. A league came around, Vince McMahon started, called the XFL. I actually signed a contract with the XFL, and I never got drafted, but I actually do. It's one of my collector's items. I have a contract from the XFL. And what the XFL was, it wasn't designed to initially replace the NFL. That's how they were billing it. They were trying to sell it as a spring football league that would be kind of the extreme football league. And they were trying to talk about how we don't have any of those wimpy NFL rules, such as the fair catch. We don't do that wimpy coin flip. We do the fight for the football at the beginning of the game. And they were trying to just build it up as a more extreme sport. But in actuality, the NFL's pretty extreme, and it hurts pretty bad when you get hit in the NFL. So it really didn't work because of the fact that they were trying to compete with the NFL without saying they were competing with the NFL. What they did with the XFL that was actually, I thought was an interesting idea, is you paid the players all probably between $40,000 and $50,000 a year. The most you could possibly make if you were the quarterback on the championship team, you were going to make $100,000. And I think I was slated to make $40,000 had I been drafted as a lineman. And to give you an idea of how that was at that time, had I made the Bills when I played for them, my rookie salary would have been $193,000. So it was definitely a lot less of a a lot less pay than what the NFL was, but it was still something where guys could get a shot. Now, the other thing that actually has made some waves in terms of creating or kind of raising an eyebrow to the NFL is arena football. Now, arena football is a unique little novelty in the fact that you don't have to pay 55 players to make a team. You pay like maybe players. You don't have to rent out a giant stadium. You can rent out a basketball facility. And it's some things to where some teams make profits, some don't. Unfortunately, the Chicago Rush, the team I actually got to be a part of in their first year, is no longer, just because of the fact that they couldn't make it. What the NFL has done with the arena leagues is the NFL, I believe they actually still own a portion of the Arena Football League. I'm not 100% sure on that, but that's something to where the NFL has realized, okay, this is a novelty. This is something we could kind of make as like the minor leagues of the NFL type of thing. And it showed some interest. A lot of celebrities own teams in the Arena Football League right now. Gene Simmons, the lead singer of Kiss, owns the LA Kiss, or he's a part owner. John Elway owns a part of the Denver team. John Bon Jovi owns part of the Philadelphia Sound. So with that, it's one where the NFL is realizing that that's something that might be something, but it's really nothing huge as of yet. Now, I think what's interesting about the NFL going public is the fact that, number one, like what Mark said, you can extract billions of dollars, and owners could get that. And what that does is that gives the public a chance to own arguably what could be the most successful entity of anything in the history of our nation. We talk about this all the time.
Successful entity in the history of our nation?
What's more a private entity? What's more profitable?
I think Apple makes a little bit of money, just a bit.
Coke?
No, but not in time. They won't.
Coke
I mean,
Industries?
if the NFL, but with that, the Apple hasn't done it for the period of time that the NFL has.
Yeah.
Track record, I might give it to you there. Yeah.
So I mean, understood.
Listen,
okay.
The NFL is a wildly successful private entity. I'm not going to argue with you.
Got it. So I think with that, the good part about it is you're giving the general public a chance to own something like that. Now, the only thing with which it would concern me on that is if in some way there might be some type of insider trading going on, but they need to make sure that they have the checks and balances because of the fact that I'm sure no insider trading goes on ever anywhere else, but you'd have to kind of monitor it in the same way that they monitor sports betting in football in the same way with which the stock was done. So I think that it would be, I would be 10 times the NFL devotee that I was of Apple if they ever were to go public, and I'd be a big fan of it.
I'd say it'd be a huge move. Can you imagine the fight for that listing on the exchanges? They would all want it because you're right. Everyone and their mother, every Joe Schmo.
What do you think their stock symbol would be?
It'd be BOK or something stupid. You just
BALL.
My biggest pet peeve in the world: non-related symbols, and they would probably make the worst one of it. I don't know, something horrible. But yeah, that would be quite the listing. That would probably beat the stampede to get into Facebook or even Netscape back in the day and all the other big epic IPOs that people have been lining up for. NFL, everyone and their mother would probably be on board for that one. So that would certainly be fascinating. Interesting, Mr. Sebastian, a little bit of an interesting off-topic way to apply some of the things we've seen here in the options and derivative space to what's going on a very much a pressing topic of both financial and sporting interest. So interesting stuff. We're going to play with ideas. If you have ideas for segments too, listeners, by all means, send them in. We love to play with stuff whenever possible. And meanwhile, we're going to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, buddy, welcome to Around the Block. You guys know the drill. This is the portion of the show where we break down what we're watching and keeping an eye on for the rest of this week. A lot of stuff coming up. I mentioned I'm going to be in Miami all week, so I'll probably be out on Thursday's show, but these guys will be taking the reins and I'm sure doing an able job. A few things on the horizon for this week. Still some earnings on deck. A lot of the big blue chip names have come out already, but we still got, like I mentioned, Disney tomorrow. Might be some interesting move. I mentioned some interest in that name coming on the heels of their big successful week, and I'm sure many, many successful weekends to come for that movie. We also got Office Depot and Groupon, a big name out there. Groupon as well. Of course, the mother of all the retail heavy speculative names, in addition to Apple and Facebook. Of course, Tesla, looks like they're trading right now at about $230, and they're pricing in about an $18 straddle or so nearly an 8% move. We're still a couple of days out from earnings. We'll see how that evolves as the day gets a little closer. Of course, Whole Foods, Alibaba, another one that's had perhaps a very, very tumultuous IPO and post-IPO period. We'll see how that one plays out. Of course, Zynga, one of the Rock Lobster's favorite names out there as well. And then finishing off on Friday with AOL and a few others. Of course, also some non-farms on the horizon for this week as well. So we'll see how that plays into that ongoing premium volatility discussion we've been having on the show. Will people actually buy options going into the non-farms? It'll be the first time in about a year we've seen that happen. We may actually be poised to see that happen. So we'll keep an eye on that towards the end of this week as well. In addition to all that fun stuff, what are you guys keeping an eye on? We'll start with you, Mr. Greasy Meatball.
Yeah, just keeping an eye on the economic data. I'm going to be watching those interest rates. We again touched over 21.18. I'd like to see that 21.20 that Mike is watching as well. And then I'm going to be looking for my news release on the NFL going public.
Stay tuned for that one forthwith, sir. Mr. Tusaw, what are you watching the rest of this week, sir?
Well, after my conference calls I have with the Hunt family in Kansas City, the Maras in New York, and the McCaskies in Chicago, of all those people who are my good friends who have no idea who I actually am, everything with which you just mentioned, 21.20 on the S&P, as well as bonds. I think bonds is probably the thing I am watching the closest right now because we are negative on the year, so it should be interesting.
Interesting indeed. That's probably a good way to describe this week. Some people saying earnings season is done, but still a lot of hot names to watch, keep an eye on. Certainly people like to trade around Tesla and all the other fun names out there, so a lot to watch for the rest of this week. And unfortunately, that's all the time we have for this episode of the old OB. But before we go, as always, let me check in with each of my cohorts here on the old All-Star panel, see what they have cooking that may interest you. Starting with you, Mr. Uncle Mike, what's cooking in the land of RCM?
All right. Well, depending on when you're listening to this, on May 5th at 4 p.m., come to our Chicago Alternatives event at the CME headquarters at RCM. It starts at 4 o'clock. You may or may not be able to get in, but either give our office a call or visit our website for information on it at rcmfutures.com.
You guys are killing me. I wanted to go to that too, but of course I'll be in Miami, so I can only be in one place. I'm not Nightcrawler, unfortunately. That would be cool, though.
That would be cool.
All right. And Mr. Seabass, what's coming up in the land of the pit?
We started doing this every Thursday or Friday. I post a video on the blog instead of the normal written up blog. And I just talk about, a trade idea that I like. Obviously, it's meant for educational purposes. I'm not putting it out there as a recommendation. I don't follow it. So it's not that. But I have I've started putting out an idea of a trade, a directional opinion, simple buy, call, buy, put type trade that I like and why, and as a way of your average retailer understanding how a professional trader might decide to buy a call or buy a put.
Checking out, diving into the video foray. So if hearing him is not enough, listeners, you want to see his lovely face, then tune in.
No,
it's all
screen share, so you're saved.
Oh, okay, you are saved. Then by all means, listeners, tune in. Do not be scared. Tune in, check it out. optionpit.com to learn more. And of course, I will be out on Thursday. I'll be basking in sunny South Beach, so feel great pity for me, listeners. But stay tuned to the network, of course, because these guys will be running the show on Thursday, and of course, you'll be hearing it on Friday. So stay tuned to all that good stuff. And of course, stay tuned for all the cool stuff we have coming out from OIC, which should be hitting the network any day now once I get down there and start cranking it out. So I'm looking forward to that. And of course, these guys will see you on Thursday, and I'll see you next week right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.